So I'd like to talk about why I won't be investing in Beyond Meat. And there's been a lot of chat about different reasons why vegans should or shouldn't. And there's also been a lot of chat about why investors should or shouldn't. Is it a good investment? Is it a bad investment? Is it good for veganism? Is it bad for veganism? All this stuff. And I want to try to cut through all that to a new level of meaning that can really make a difference for veganism as well as for your personal investment goals. So, if you look at all investments, you can group them into four categories. And of course, obviously, this is just a way of simplifying things. But if you look at investments, they're high return or low return, and then they're high risk and low risk. And if you look at that in a quadrant chart, you'll find you've got four different options. So you've got uh, low risk, low return. So that's an investment that's got a lower risk of losing the principal, but not a whole lot of opportunity to make large gains. You've got high risk, high return. Uh, and so there you have a higher risk of losing your initial investment, but you also have a higher prospect of making very large gains. Then there's a category I like to feature called low risk, high return. And this is how wealthy people tend to look at investing. They minimize their risks in extreme ways and at the same time get large gains. And very few conventional investors look at those opportunities. And we're not really going to cover that in today's video, but it's just you want to fill in that quadrant. Now, the last quadrant that a lot of people get caught in when they're talking about a company like Beyond Meat is what I call high risk, low return. And why do I think that Beyond Meat right now is a high risk, low return opportunity? It's not because the stock price is too high. That's not really the problem. The problem is that any kind of company trading on the public exchanges is simply low return compared to the other kinds of high return options. And I like to use Google as a benchmark. If you look at Google's performance over the past 15 years, once they went public, investors who invested on day one have made about 25% annual return. So that's good compared to, say, the Standard & Poor's 500 index, which has typically made about 6.5% during any 10-year period. But it's still really low compared to what's possible in early stage investing. So if you look at Beyond Meat, my estimate is that people who invested in their Series A have made 140% annualized return, or a 2,500-fold return on their initial investment over a 9-year period. This is vastly greater than what people have made from Google investing after the IPO. And so that's really the important thing for us to consider is, are we investing in an early stage company that's going to exhibit very high growth or some other high growth opportunity, or are we going to invest in a low growth class? And there's a lot of reasons to invest in low growth category. I'm not saying that's a bad thing, but we have to understand that for most people, the kind of investing they're doing, their goal is wealth preservation. They've earned their money in one way, and they're hoping to at least not lose the value, the buying value, and the purchasing power of what they've earned so far. So that's, until you get into more sophisticated strategies, investing in publicly traded stocks is pretty much low return unless you use some kind of leveraging techniques, which we're also not going to get into in this video. So now I'm establishing that Beyond Meat is a low return investment. And why is it high risk? Because the stock price itself is going to be fluctuating quite a lot. So and the company, still has a long way to go before it's on really solid ground. I think that as a business, and not really worrying about any other aspect of this analysis, there are a lot of market risks, there are a lot of production risks, and uh, and so I think that the price risk on the stock itself makes it quite volatile. And I believe we're going to see a lot of volatility because I believe vegans have been bidding the price up because there's no other publicly traded stock that expresses vegan ethics even as much as Beyond Meat does. And, that in any way really holds that promise for the future. So what's the alternative? Well, the alternative is vegan early stage investing. And there are hundreds of companies in the vegan sector all seeking capital. And right now, people in the general public are missing out on these opportunities simply because they don't know where to find those opportunities and they don't know how to invest safely in those. When I say safely, I mean, if you understand the risks, then it becomes safe, right? If you understand what happens if you stick your finger in an electric socket, then you can handle an electric socket safely. You just don't stick your finger in there. And so when it comes to early stage investing in startups, you want to limit your risk so that you can extract some high returns. And that means only investing an amount that you'd be comfortable losing 100%, and diversifying your investments by spreading that corner of your portfolio around to different early stage companies. So Vegan Launch, again, helps investors do all of those things and gain access to these early stage investments. Now, I don't have the entire set of charts for the Beyond Meat funding rounds, but if we look at if we look at Uber's first round of capital, it was only $200,000. So a lot of companies can be started with just $200,000, and that is generally the first round of any company that is on a likely path for a growth curve. So these are my thoughts. I would rather see vegans at this point. We weren't allowed to invest in the early rounds of Beyond Meat unless we were company insiders or famous people or venture capital funds. So I feel that that's not good for the vegan economy to have people that build these markets with their tweets and their Facebook posts and their Instagram posts, and their purchases as well. I believe those people, we vegans, and anybody that cares about the values that Beyond Meat is talking about getting animals out of the protein production business, I believe that those of us that care about those things should have been offered an opportunity to invest early stage and not have to wait for an IPO when all the fast growth has been sucked up by the early investors. And so I think that's not a good idea for the vegan economy to make vegans wait. At least there was an IPO. If we go back to the organic food economy, most of the companies you see going up and down the aisles never went public. So here I want to take things to a whole new level because we really can't get this wrong one more time if we want to have a planet to live on. I mean, I'm cheerful. That's the only way I can keep going, and I think you understand what I mean. In the face of all the challenges that vegans care about, we need to come up with the most effective use of our funds. So right now, Beyond Meat is fine. They've got institutional investors backing them up. They don't need the money from vegans as much as startups do. And the startups that maybe they're not located in Silicon Valley. Maybe they're not saying the right words, the magic words that get them into the VC funds right away. Or they're not in the right space, like vegan restaurants are very hard to finance. And other projects are just very difficult but worth doing. So for all these reasons, for me, the ethical vegan thing to do is to take at least the low risk, or the portion of your portfolio that you are willing to risk, you want to break your portfolio into different parts. And the part that you can afford to risk, there's no reason at this point anymore that you can't be placing those funds into vegan startups at the first or second rounds, just like the people that made these amazing returns from Beyond Meat. And I don't begrudge them the returns at all. This is natural. It's natural that a small thing is going to grow quickly. And I applaud them for taking the risk of helping startup companies. And all I want to say is that we vegans can play along. There's no reason for us not to anymore. With a combination of laws that exist and the combination of services that Vegan Launch offers, There's simply no reason that vegans should be uh, searching high and low for opportunities. There's more than enough. Uh, my goal is to get to the level where we're really processing as many of these opportunities as possible because it's a big world. There's a lot of need for vegan entrepreneurship, and there's a lot of vegan investors out there. So if we can make that match and get things moving faster, that's what Vegan Launch is all about. So thanks very much for watching this video, and feel free to visit our website or check down below if you want to get a copy of our free ebook about investing in the vegan economy.